stock I spoke about yesterday, MUR, Murphy Oil Corporation. This is a daily chart. And I was outlining a trade yesterday to look to go long at 67.51. I was looking for the market to break up, okay, through this high right in here where I'm pointing to. Right at the 50 exponential moving average. It's a nice pullback down off this high into what I thought was a support area. Market was not able to bust up through that high. Let me spread this out so you can see it a little better. Look at this. This high right here on the 22nd, Thursday's high, I was looking for that 67.44. I was looking to go long at 67.51. Wasn't able to do it on Friday. Yesterday I was thinking it would be able to get there, but we got the market made a high of 67.42, so missed the trade by 9 cents yesterday. 9 cents. I'm glad it missed it because the market dropped on as a general market dropped. The market came down big time as well, so we were not executed on this trade. I mean, that's why I love these trades, because these trades, you know, force the market to get you in, right, by breaking up through certain highs if you're looking to go long, or down through lows to get short. So therefore the market's got to prove itself that it wants to go in that direction by breaking those numbers, okay? What I've added to this chart is, you'll see here on the bottom, is the average true range of the last 21 days, pretty much the last month. Okay, average true range, as you all probably are already aware, takes into consideration any gap movements and gives you that range. So what we'll see on MUR is $1.34. I like, you know, markets that have relatively larger ranges, but ATRs are good for placing stops and stuff, okay? So again, I'm going to take this pretty much off my radar because it has, in fact, broken down through that 50 exponential moving average. So let's move on to something more interesting here. Look at silver. Silver has really made a big move. Remember, I've pointed out gold and silver here the last few weeks that the market was going higher, and it has been moving higher. As you can see, though, silver is definitely leading the gold market. Silver it's getting close to that 200 exponential moving average. This green line, this is the 200. As you can see, we broke up through that 50, so we are going to challenge that 200. I'm looking for some support to resistance rather to come into play. Let's take a look. Okay, what I've done here is I've measured. Let's see here. I've measured the Fibonacci retracements going back to this high up in here, put in place in January of this year, right? Where I'm circling up in here, measured from that high. I'll show you exactly how I did it. Again, I personally use TradeStation, so to draw your fibs, I have this tool right here, Fibonacci price retracement lines. I left click it, place it on the high of where I want to measure. So I take it, click it, drag it down to this low right in here, unclick it. That gives me my fib numbers. Yesterday or 2 days ago, we blew up through 38.2% right in there. Look at where the 50 is. The 50 Fibonacci retracement from high to low is slightly above that 200. So I'm looking at some resistance coming into play here. About 20, from where it's at right now of 2371 to 2420. I'm looking for resistance. I'm looking for the market to make a little pullback. So I'm looking for that in silver. And then, of course, that would lead me to believe the same thing in the gold market. Okay, again, if I were to measure the fib, let's see, from this high down to this low, that would put me up at the 50. Anywhere between the 50 and the 200 is where I'm looking for resistance to come into play. This area right in here. So between anywhere from 140 to 140, let's see where. Between 140 to 140 and 3/4, right in here, definitely resistance. I won't be surprised if we were to move a little higher and start moving down a little bit, but there's no doubt the market starts pulling down I would be looking to get long, and I'll show you exactly where I'm looking to get long, but I would need to see a pretty nice pullback from these levels here. All right, let's flip it quickly to a 3-minute S&P chart. Again, a bear chart, nothing on it, because you really don't need many technical indicators or moving averages. So I'm just going to show you something here. The market closed yesterday. Now, remember, that news hit the wire that we might enter into some more with Syria. That's what brought that market lower. Closed on the low of the day. Closed at what, 1654. Opened up way down here at 1638. It's a 16-point gap. Pretty big gap, right? So basically what we're waiting for is, look, it just turned 10 o'clock, so we've got that first half hour. That first half hour pretty much gives us an indication of the bias of the day, you know, pretty much depending on where the market breaks to. So what I like to do is I like to look at the high of that first half hour's range, and I like to look at the low of the first half hour range. So we've got the high of the first half hour and the low of the first half hour. And quite frankly, wherever the market is able to break to helps give me it gives me a bias in which way to trade. Now, there are times where I'll take trades in that first half hour. You've seen me outline numerous trades in that first half hour. But a lot of times what I like to do, especially when the market gaps like it did today, I like to sit and wait for that first half hour to kind of give me an idea of what the market wants to do. So what we've done here in the first 1, 2, 3, 4, 5, 6, first 21 minutes of trading, we rallied up, okay? And now, since then, we've backed down off those highs. Now, this is a critical point right in here. I want to know whether or not the market's able to break up through the high or back down through the low. If the market's able to break up through that high, then I'm looking to take a position in that direction, looking to make a move to the upside. So what I want to do is I want to measure the fibs. I'm going to measure it from this high here down to the low, and I also want to measure from where it closed to today's low so far, to give me an idea of resistance on the way back up. Okay, so look, we've got confluence between the 38 and the 50% retracement of these two swings, right? From this high to this low, and then where it closed to the low. So I've got the right in here, about 1645 and a half, right? The 38 and the 50 are on top of each other, and then again at the 61 and the 50% back in here. So what I'm going to do is I'm going to place two lines here, one there, and again right in here. And I'm going to take off these fibs, and if the market is able to break up through today's high, right, up through today's high of 1644 and a quarter, I would expect the market to run up to 45 3/4, and the second level would be 47 3/4. Those would be my targets on the long trade up through the high. Okay, but again, not until the high is broken am I looking to do anything. If the market breaks down through the low of the day, then I would be looking to initiate shorts, short term to the downside. So hope that helps, and if you've got any questions, let me know. Have a profitable day. Bye for now.